Newsday continues here on One News Now Business. I'm Dani Laurel. Here are the biggest stories on the economic and corporate fronts. McKinsey & Company Philippines expects the economy to grow at a slower pace this year. The consulting firm said gross domestic product may expand by around 5.3% in 2023. That is well below the government's 6 to 7% target this year and the 7.6% expansion last year. McKinsey & Co. Philippines cited several challenges that will drive slower economic growth. These include high unemployment numbers and inflation figures, as well as rising policy rates. The government is scheduled to release GDP data for the first quarter of the year on May 11th. Now, as widely expected, the Bangko Sentral slowed its pace of monetary tightening and even signaled a pause at its next meeting. The Monetary Board raised interest rates by 25 basis points, bringing the benchmark rate to 6.25%. The overnight deposit rate now stands at 5.75%, while the rate for lending is now at 6.75%. Since May of 2022, the Bangko Sentral has raised interest rates by a total of 425 basis points, including 50 basis points each, during its last two meetings. Bangko Sentral Governor Felipe Medalla clarified that the Monetary Board made the decision to hike by just 25 basis points, even before the U.S. Fed delivered a quarter-point rate hike.
With core inflation rising in February despite a modest decline in headline inflation, further monetary policy action was deemed necessary to address broadening price impulses emanating from robust domestic demand and lingering supply-side constraints.
Now, moving forward, Medalla said the decision of the Monetary Board will be driven by the inflation outlook. He says that if the inflation in March slows from the 8.6% CPI in February, the board may no longer hike interest rates during its next meeting, that's on May 18th. The BSP has slightly trimmed its inflation forecast for 2023 to 6%, that's from 6.1% previously. And for next year, the BSP also lowered its average inflation projection to 2.9% from 3.1% previously. Alternergy debuted on the PSE this morning. The renewable energy firm, though, opened lower than its offering price during its first day of trading. The stock opened at 1 peso and 22 centavos lower than its IPO price of 1 peso and 28 centavos. The Makati Business Club and some other business groups that are looking at amending the Constitution could adversely impact investments. In a joint statement, the group said the, quote, possible lengthy and fractious process of amending the Constitution may make investors take a wait-and-see attitude for an extended period of time and may therefore derail the impact of the economic reforms. The groups also ask Congress to rethink pushing through with the proposed constitutional convention, which is estimated to cost from 14 to 28 billion pesos. The group said the projected expenses could be better used for pro-people programs. This includes programs to address high inflation, better transportation, and social services such as health, education, and social security. The groups also said political debate can derail the recent reforms and President Bongbong Marcos's efforts to boost economic gains. Now back to the corporate front, PLDT is ruling out fraud in the issue concerning its budget overrun. PLDT Chairman Manny V. Pangilinan assures shareholders that the company's financial and operating conditions remain strong. Mobile journalist Michelle Giliang with these details.
PLDT says it found no evidence of fraud or bad faith in the 48 billion peso budget overrun case which came to light last year. It attributed the overrun to over-orders of 5G technology between 2019 to 2022. In a press conference Thursday afternoon, the telco giant also said the figure in question has been cut down to 33 billion pesos after negotiations with major vendors.
Our forensic review of the circumstances surrounding the CAPEX expenditure disclosed in the December 16, 2022 is substantially complete, and identified no evidence of fraud, bad faith conduct on the part of any employee of the company, and no basis to restate the company's historical financial statements. So our 2022 audited financial statements is unqualified and no restatement.
PLDT Chair Manny Pangilinan also assured shareholders that the financial and operating conditions of PLDT remain strong and that they're not expecting a downgrade of their credit standing.
We're relieved that that is the case, and it's now incumbent upon management and the board to get back on the saddle and move on, move forward, and demonstrate that despite this big hump on the road, the financial and operating conditions of the company remain strong.
But the budget overrun did hit PLDT's bottom line. Net income plunged by 60% to 10.49 billion pesos last year, even as total revenues climbed 6% to 205.25 billion pesos. That was driven by strong performances in both its home and enterprise segments. Also, revenues from the fiber business shot up 45% on year to 48.5 billion pesos, with the telco booking 514,000 new subscribers last year. For this year, it's looking to spend between 80 to 85 billion pesos in capex, and CEO Al Panlilio says they're expecting revenue growth in the mid-single digits. Mobile journalist Michelle Giliang, We Are One News.
We'll be back with more stories after the break. Keep it here on One News. Quarter of the year, and already so many revisions and iterations on the economic outlook. Here to give his latest assessment, we have with us Robert Dan Roces, Chief Economist of Security Bank. Good morning, Sir Dan. Welcome back.
Good morning, Danny.
All right, so March pa lang pala. It just feels that this first quarter has gone ups and downs. Let's kick off with the global issue, no? The global recession outlook, so to speak. What's your take on that at the moment, given all of these financial crisis, if you could call it that?
Well, there is that expectation of a slowdown. No? I wouldn't say it's going to be a crisis. I wouldn't say it's going to be, a full-blown recession globally. I do think there is an offsetting that will come from China's reopening. No? So,
okay.
As we know, no, the pivot was essentially quote-unquote successful for China. No? So, that should add around 0.9 percentage point to 1 percentage point to global inflation, primarily because China is the largest consumer of commodities globally, including oil. No? So that's essentially a world with China already back in the saddle. No? So with that, I think the biggest gainer will be, or the biggest, who will gain from China's reopening will be the European area. No? So that's going to give a boost towards growth in the European area. No? So essentially, that will offset any slowdown.
Okay, what is the realistic spillover into our economy when it comes to FDIs, remittances, even exports lowering down, and the peso, if perhaps the oil story might come to our benefit if that goes down?
Well, essentially, let's talk about remittances first. Now, remittance source, the biggest one comes from the US. No? So this is around 45% of overall remittances. No? So Well, there are two sides to the coin. No? Before, whenever there is a recession or a slowdown, OFWs tend to send more money,
Okay.
no, sort of a hedge, no, in case things go further south, no, and that could be the case actually this year if there is a recession or a minor slowdown in the U.S., no. But of course, no, technically that should slow down remittances because, like I said, the U.S. is the biggest source, so probably the senders will be hedging locally, meaning from their source of work because they'll get hit by that slowdown in inflation as well. No? Second, we have exports. No? Exports, we could probably see a recovery in the export sector only in the second half, and that's because China's our largest export destination. So right now we're experiencing that slowdown. One, because of seasonality. Second is because, China is still trying to recover. No? So it's not yet there. No? But by the time, that our exports recover in the second half, imports may have grown by so much. No? So that means there's going to be that large trade deficit, even though, exports are trying to catch up. No? So, a trade deficit means a weakness for the peso, no? Essentially, that's depreciationary. You have
Okay.
more demand for dollars locally because imports are higher. On the other hand, you have China's credit growth, no? And Europe, for that matter, in the second half because of that reopening. So, historically, a credit impulse for both China and Europe is dollar negative. No? So that means the dollar should be weaker, and that means the peso should be stronger. No? So given those scenarios, we think there's going to be a lot of volatility in terms of the dollar peso exchange.
Okay, but net, downgrades have begun already with the GDP growth, especially after the first two inflation prints of January and February. What are the chances that we can even hit the 6% minimum target of the government?
Well, you have the gross capital formation side of GDP. Even if the government expenditure contracts a bit, the offshoot is that it's shifting towards a PPP type of support, for infrastructure for one. So that means the gross capital formation side of GDP will benefit from it. Second is, even if consumption slows down, there's going to be a net spillover that will also rebound towards consumption. So that's still good for private consumption, which is around 75% of GDP. And then lastly, we have, I think, very good FDI pledges coming from, the visits of the president, the economic team, and businessmen abroad. So I think we have very good pledges, and I believe historically, around 70% of those FDI pledges actually get realized. So if that's the case, even with a slowdown in the private consumption side, it's still going to get offset by gross capital formation, which we think will be an outlier this year. So net, probably we could hit a decent 6.3% growth.
Okay, so kaya pa. And finally, Sir Dan, before we let you go, the BSP pulled the trigger, 25 bips, just keeping in step with the Fed. Is this the last of the rate hikes that we will be seeing?
Well, you noticed that they were really cautious about saying if this is the final one or not. Governor Medalla did say that they are going to be data dependent. So, the BSP will remain cautious. But the inflation trajectory is what they are looking at. And it's actually the trajectory in the months ahead seems to be supporting the narrative that inflation will probably be going down. I think it's going to go down faster in May.
Okay.
So we're looking at a steep disinflation. So that means that's going to be very good in the sense that they could likely pause at the current rate of 6.25%. No, we're also seeing range-bound exchange rate, which also supports a pause. They were trying to chase the rate curve versus the Fed last year. No, so we saw the depreciation when our central bank was quite late to raise interest rates. No, but we've been consistently above the Fed rate. No, in fact, before the Fed's policy rate decision yesterday, Philippine time, we were above by around 1.25 percentage points. No? And then in the afternoon, we raised our own rate by 25 basis points. No? So we're consistently above
More than
the
1%.
Fed's rate. No? So that's why we're seeing that volatility already. No? We're not as sensitive to the dollar levels lately.
All right, so hopefully worst is over for inflation. Remittances stay strong despite the issues offshore, and still sticking to a 6.3% growth forecast for this year. Thank you so much for those insights, Robert Tan Roses, Chief Economist over at Security Bank. Thank you, sir.
Thank you.
Now, the Agriculture Department is studying implementing suggested retail price of 90 pesos per kilo for sugar. This as sugar continues to sell for as much as 110 pesos per kilo in the market despite the arrival of imported sugar. The Sugar Regulatory Board's part, however, says it cannot price imported sugar too low as it would affect the profit of local producers. The department says it still has to meet with stakeholders to finalize the SRP. And the Presidential Communications Office says the President has accepted the resignation of Sugar Administrator David Alba. That's effective April 15th. In a statement, the office says Executive Secretary Lucas Bersamin tried to convince Alba to remain as SRA chief. Alba, however, reasoned his worsening health condition as the reason for his resignation. Sugar Board member Pablo Azcona earlier said he did not believe that the latest sugar importation fiasco had anything to do with Alba's resignation.
Yung sinabi po sa amin is yes, na-receive na po ng Malacanang yung resignation niya. Now, wala kaming knowledge whether or not it was accepted or acted upon po. So, yung in-explain po sa amin ng DA is it was because of his health po. Parang yung sabi po ng mga doon is he was having problems with his blood pressure.
And those are the top business stories of the hour. I'm Danny Laurel. Join us again at 2 p.m. We are One News, all sides, all the time.